Hey, welcome back to Everyday Economics. The podcast helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of the America's Talking Network. You can check out all of our great podcasts at americastalking.com. To support Everyday Economics, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Tuesday, June 27th. And joining me as always, my friend, my colleague, the always on the money, Dr. Orphe Divounguy. He's a PhD economist, Dr. O. We've talked about this subject before, but I want to talk about it again. And that is not a surprise. I mean, everybody read the title of this before they opened and started listening to it. But is like, are we looking at a soft landing? Are we looking at a hard landing? Are we looking at no landing at all? The last week, very interesting comments from Atlanta Fed President Raphael Bostic, who is in line with what we've heard from Fed Chairman Jerome Powell. I mean, good with the idea of pausing on further rate escalation at this point, kind of watching and seeing what happens on the playing field.
Although Powell came back and kind of talked it back a little bit when he went and said last week, he was like, we're going to hike again. We're just got to slow the pace of hikes, right?
But I felt like that he was explaining something to children that he'd already said out loud.
He wants the market to really internalize that because you know what? I mean, you're right. The stock market reacted positively to the rate pause. But that's what it is, a pause, right? And I think people thought the Fed was done.
But he said they weren't.
I know he did. But we're children, right? We're waiting because we're hopeful. Anyway, the U.S. economy is doing pretty well right now. Look, the question is, how is it possible? We've been talking about recession for over a year now. How is it possible that, the U.S. economy is still growing? The Fed has been hiking rates for over a year, right? A year and 3 months.
I mean, not just kind of. There were no pauses in between. I mean,
that's right.
Quarter point, half point, 3/4 of a point, all the way through.
That's right. Consistent, the speed of tightening was a record pace tightening in the past year. And the U.S. economy is still looking pretty strong. And we're going to get some GDP data for the second quarter, I think later this week. And look, I'm expecting the U.S. economy to continue growing, to have grown at an annualized pace of, somewhere between 1% and 2% this quarter. And so we're in positive territory. Part of the story has been, right, the strong labor market. We've still had over 10 million job openings in April, 12 million in March. So, I mean, it would take almost till the end of 2024, if not a little bit later, to continue slowdown, right? The decrease in job openings to get back to normal. And so we're nowhere, the U.S. economy is still very strong. And to me, almost, it feels like we're not quite ready to land the plane yet. And yet there are threats. There are headwinds. You have student debt repayment, loan repayment coming back online this fall. You have fiscal policy that's going to tighten as part of the deal for the debt ceiling. You also have the risk on the banking side. If you think about what happened with the bank turmoil back in March, lending tightening started to come, to come online. You started to see the banking sector tighten lending quite a bit. We're months into that. And then you have the biggest thing that I don't think a lot of people are talking about. I mean, some people are talking about. I saw the headline in Bloomberg, and I think a reporter reached out to me a couple of days ago. So some people are talking about it. Commercial real estate. And when I say commercial real estate, I want to make sure people understand that commercial real estate is a lot of things. It's many, many things. It's not just office spaces. I think we did a podcast on this. Look, office spaces are about 15% of the space. All right. So yes, office spaces look in trouble. It looks like office space issues are not just cyclical, meaning not just having to do with the Fed tightening and where we are in the economic cycle. It could be structural, right?
Whatever they call it, basically like white collar office space. I think that there's a huge cultural shift.
There's going to be a shift. That's right. Potentially. Right. And so, but everything else in commercial real estate is still doing pretty well. If you think about storage units, if you think about, your local McDonald's and KFC and those spaces, they're doing well. I mean, the malls are struggling a little bit, but retail's doing pretty well, right? So you're looking at these other spaces and doing okay. But here's why I brought this up. I brought this up because any trouble in commercial real estate is going to affect the economy through the bank tightening. Right. So if remember, banks are the ones, if people are not repaying those loans anymore, the bills are due and they're not able to pay back that debt. Right. The banks are going to be the ones that hold the debt, and the banks are going to be the one that are going to take it on the chin. And then what that means is basically banks, especially regional banks, are going to have to tighten further. And I think that is the channel through which commercial real estate might affect the rest of the economy. So all of those are headwinds, and those headwinds are likely to kind of slow the U.S. economy, the pace of economic growth, and potentially bring down inflation as well. So yes, the U.S. economy is still on solid ground, but it's slowing really fast. There are strong headwinds. And I think that's why the Fed is being careful. Very careful.
Let me put this quote from Bostic in front of you. So in an interview he had with Yahoo Finance basically a week ago, it was last Wednesday. We're recording this on Tuesday, June 27th. So this would have been like the 21st of June. He said this: I actually think that we are still at the very early stages of our monetary policy tightening, starting to influence the economy in a significant way. I just feel like we have a little bit of time to just let that play out and see exactly how much the economy is responding to our policy, end quote. So he had previously said, in that interview, that his baseline is that we should stay where we are for the balance of this year. That doesn't jive necessarily with what Jay Powell said, but it's not wildly off.
Yeah, exactly. It's let's wait and see, right? Let's wait and see. We know that there's a lagged economic impact of monetary policy, and that, you tighten and it's coming, and there's a lot of headwinds ahead. I mean, if you start to add the risks to banks, right, and the risk of and financial stability, you realize that the Fed now is dealing with not just inflation. The Fed might even be forced to tolerate a little bit higher inflation in order to prevent a financial crash. And so that is where we are right now. I think inflation is likely going to tick down as you see more, banks tighten credit standards, and lenders kind of like, they don't want to let go. It's things are, you have this commercial real estate, especially, I think that's coming for banks, and those smaller banks, which have greater exposure to commercial real estate, are really, really going to tighten the belt. And that's definitely going to slow down the economy.
Well, I appreciate your thoughts as always. For Orphe, Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.